Hello, everybody, and welcome. As we like to do every week, we like to take a look at the past week's market activity and then, of course, bounce around the market and look for something to trade. But before we even get into that, I want to let you know that this Wednesday, Los Angeles time, I'm doing a webinar, Three Guiding Principles of Successful Options Traders. These are obviously huge lessons I've learned over my course of my career trading. Absolutely mandatory to being successful. These apply to anyone and everyone. I'm going to attach this to this lecture, so you can use this link if you want. You can see there it's 11 a.m. this Wednesday, US and Canada time, Los Angeles time, Pacific time. Anyways, so hope to see all of you there. As far as the market, well, basically, again, it's been straight up. On Friday, there was a little bit of a blip, right? It had a bit of a down day, and when that happens, volatility spikes up slightly, but not much to speak about. Again, we're pretty much at all-time highs. Not much has changed. The market just seems to be cruising along. That could change, but we never know. The Nasdaq looks exactly the same. The only one that always looks a little bit different is the Russell, but even that one seems to have caught up now, and that's pretty much near its all-time highs as well. So they're all right in the same boat. So with volatility in the market pretty low, what do we want to do? Well, I always have trades on in all the indices at any given time. Low volatility, high volatility does not matter. I always have trades on in what I like to call here, I call it BOGS. And what this stands for is it's bonds, oil, gold, euro, which I'm not always in there because it's not very liquid most of the time. And this, of course, is the indices. So SPY, basically. So I use the term, I just kind of with this BOGS thing. So I kind of like to have trades on in these things at all times for the most part. Right now, I don't have anything on in the indices. So back to the SPY we go. We did, I think we did bonds last week. So we're going to SPY this week. So in order to save all the time and trouble, because there's a million different strikes, I go to the trade page. I'm right here at 45 days, which tomorrow will be 43, which is right in our wheelhouse. I've already set this thing up for us. Stock is at like 643.5, so I'm going roughly $23 up, $23 down, kind of roughly in each side. I'm buying the call and the put that's $2 away to create a $2 wide iron condor. And as long as I collect at least 66 cents or more, again, this is SPY up here. As long as I collect at least 66 cents or more, this is a valid trade for tomorrow. So assuming nothing changes, we'll go in around $23 up and down. If that's not enough, if we're not collecting enough credit, what we can do is obviously bring these in tighter. When I say tighter, what that means is I'll bring the call side closer. So I'll go from 666, 668 to maybe 665, 67. Same thing over here. 621.19 will go to 622.20. That kind of thing. Closer meaning I'm moving my short strikes closer to the stock price, and when we do that, we end up collecting more credit. So we'll just play with those numbers, and we'll keep doing it until we hit at least 66 cents or more. So that is our trade for Monday, and again, hope to see you all here on Wednesday for the webinar. I'll attach this as well. Take care.